Friday, the indexes created sell signals. the uh, the Dow created a bearish engulfing signal, and the Nasdaq created a bearish left-right combo at the top of the trading channel, which left a little bit of speculation that on a weaker open on Monday, they could probably at least be coming back down to the bottom of the trend channel. However, noting that the pre-market futures were showing the markets were trading positive this morning, allowed investors to hold from closing out positions and continue to watch or indicate that the uptrend is still in progress. Knowing that the candlestick sell signals needed to be confirmed by a lower open, it's also pointed out, or should be noted, that when the indexes like the Nasdaq and the S&P 500 not only opened positive, but they came back up through the open of Friday's trading, indicating there was no selling pressure on these markets. That information allows the candlestick investor to continue to hold positions or add to positions that were showing good, strong price moves out of patterns. For example, SRYS was reiterated as a buy. Note that last week it came up through the 50 on what we call a bobble breakout, which is essentially a a J-hook pattern that is much more defined because you can see where they sold it when it hit the 200-day moving average. You could also see they couldn't close back below the T-line, which told us when they came back up through the 200-day moving average that this was just consolidation, that we were in wave 3 of this price move. We reiterated a buy on this after it broke through last week, knowing that if it opened positive, we'd have another doji sandwich, which would tell us that wave 3 was definitely being confirmed. This allows us to kind of expect the magnitude of return being the same as this, moving in this direction. That same scenario was applied to our positioning on SPCE. You can see how the J-hook pattern, almost a scoop type pattern, bounced up off the T-line, broke out into new territory, making the potential of this wave right here the same as this wave right here. Again, the magnitude of the return of this price move is going to be substantial compared to just a merely uptrending stock in an uptrending market. And our recommendation on iRobot was also a function of seeing a cradle pattern, a big pullback or big down day, indecision, 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 and note where that indecision occurred, right smack dab on the 50-day moving average with a hammer, a doji hammer, and then a bullish candle breaking back up through the T-line, off the 50. Friday, it opened and traded lower, but we'd already had a buy signal, the cradle pattern, which told us if it opened positive and started trading positive, our next signal would be called a stick sandwich. Big up day, big down day, big up day. The stick sandwich, also being a candlestick buy signal, was further indication that if this started trading positive, our J-hook pattern was in progress. Knowing what should happen based upon human nature allows the investor to be in situations where the probabilities are greatly in their favor, they're in a right direction position at the right time. And our recommendation on SPR as a short was based upon the visual observation of a wave 1, wave 2 bearish J-hook pattern. So even though the market was relatively strong today, we could be shorting successfully, knowing that this wave 3 to the downside was the result of this pattern setup of human nature. What this basically does is allows a candlestick investor to identify the high probability trade setup no matter which way the market is going. That'll be it. We'll see you in the chat rooms.